Hello traders, Rich here, and here's a quick but detailed update on USDJPY. As usual, if you like video analysis, let me know in the comments or simply leave a like. So let's get started. As we clearly see, USDJPY has been overall bullish for a while, making higher lows and higher highs, trading inside this rising giant brown channel, right? And lately, if you remember, I've posted that we will be looking for sell setups around the upper bound because it's the intersection of the supply zone, which is a major high from 1998, also intersecting with this upper brown trend line acting as a non-horizontal resistance, or what I consider an overbought zone. So we rejected the zone and we trade on also the 150 round number. So we rejected it and traded lower. Now if you zoom into daily time frame, I also posted yesterday that we'll be looking for bus stops here because it's the intersection of the previous major high and the lower trend line in orange. So yes, we rejected this one from a monthly time frame. From a higher time frame, we try trading lower, but from daily time frame, you can clearly see that we are still overall bullish, especially lately trading inside this rising broadening wedge. So we'll be looking for short-term buy setups here till around this supply zone to retest the resistance again. Of course, no matter how strong a support is or the confluences are, we don't buy blindly here. We always zoom into lower time frames. We'll zoom in a bit. Meanwhile, until the buyers take over here and push it higher to test this supply, we can set it a little bit lower before trading higher and till around this 135, which is a strong demand zone from weekly time frame, and you can clearly also see it from monthly time frame. That's it. Okay, so now we are looking for buy stops as a trend following buy to catch the next impulse, which I speculate that it will not result in a higher high just like previously. It will result in a lower high for the bears to take over later on by breaking below this low. But anyway, let's take it step by step, right? Overall bullish from a daily time frame, so around the lower band is a trend following setup. Let's zoom into lower time frames. If you zoom into H1, we can see that we are stuck inside a consolidation here after a drop last week due to CPI. Now we are waiting for the boost to take over as mentioned, and for now that's our last high. So I'll be waiting for something like this to happen. Of course, meanwhile, as mentioned, we can trade a little bit lower inside the zone before breaking upward, or even if we break this zone, then we will be expecting a movement to the 135 zone, demand zone, where we'll be looking also for stops as a trend following buy. Now if the buyers take over by breaking above this high, which is also lining up with this previous low, we will be buying, and the stop loss will be below the previous swing low, and we target a 1 to 2 risk to reward ratio to have an edge over the market, which would be around this supply zone and the previous lows right here. Anyway, let me draw them, where we'll be looking around this area, around this entire area. Of course, price can still go a little bit higher to dive inside it before trading lower, but you've got the idea. Around this zone here, we'll be looking for sell setups. Okay, let me mark it in red as usual, and that would be it. This would be our trigger. Meanwhile, we would be bearish and we can trade lower. Before we continue, I want to tell you about Tickmill. Tickmill is established in 2014 and is one of the leading Forex and CFD brokers with registered users from more than 200 different countries. Tickmill is a no-dealing desk and ECN broker regulated in many countries like the UK, Cyprus, and recently in South Africa. With Tickmill, you can trade a wide range of instruments, starting from Forex to indices, commodities, and even crypto. Most importantly, with very low spreads and trading fees. If you don't have an account yet, make sure to create one using my referral link in the description below to benefit from 5% discounts on your trading fees. And let's continue. As we clearly see, USDJPY has been overall bearish for a while, making low lows and lower highs, trading inside this falling brown channel. And if you remember previously, I've posted this analysis where we were here, that we are also approaching the intersection. That's why we'll be looking for sell setups. And last week I made a video analysis that from H4 time frame we are waiting for the bears to break below this low for them to take over around this resistance. That's why we'll be selling. For those who would like to trade it from a lower time frame, it all depends on your trading style and so on. If you zoom into to H1, you can see that we have been bullish, and now the momentum is shifted from bullish to bearish after breaking below this major low from H4 time frame. That's why we'll be looking for trend following sell setups, right? we zoom into a 30 time frame, we can see that just like here, we are forming now a rising channel. And for the bears to take over, I would be waiting for a new swing low to form here and then a break below it. In this case, it would be a short-term trend following setup, just like the one we made on EuroJPY, if you remember. Also a very similar analysis, bearish channel approaching the upper bound, and we sold on the break of this rising one, which is the correction inside this bigger channel in orange. When the sell is activated, the stop loss will be above the previous swing high, and we target a 1 to 2 risk to reward ratio at least to have an edge over the market from a risk management perspective. Meanwhile, and until the sell is activated here as a trend following one, we know that we can still trade a little bit higher till around this area before breaking below a major low from M30, or even keep on trading a little bit higher to test this supply and so on. That's why we don't sell blindly, no matter how strong like the structure is, no matter how strong the resistance is. So that's basically it for USDJPY, and I'll see you on the next one.